The day today is going to be long, but it is hopefully going to be fruitful. We will have 3 panels, after which we will have a reception also here. But let me ask Professor Scott Palmer to please say a few words and maybe say also a bit about that. Scott.
Well, on behalf of the Latin American Studies program at Boston University, I would like to extend my additional welcome to all of you for being here today. We have a daunting task ahead of us this afternoon, and then the task force tomorrow morning to try to lay out the parameters within which Latin America is likely to develop over the next 50 years. The development parameters in the first panel, the political and U.S. policy parameters in the second panel, and the environmental and state reform parameters in the third panel. So we're pleased that we can have such an interesting and diverse group with us this afternoon, and we look forward to some remarkable insights, controversies, different perspectives, and hopefully valuable conclusions that will appear in due course in a future Pardee Center publication that will be widely disseminated and equally widely received. Thank you all very much.
Thank you, Scott. Thank you very much. I'm going to switch roles here as the moderator for the first panel. As was mentioned by Professor Palmer, we do have a daunting task. We have a number of papers. We have 3 panels in the day. We want to cover a lot of ground. Can I ask my colleagues who are on the first panel to please take the podium? We have four speakers on this, and I'll say a bit about them in a minute. But if you could please join us. Helwege, Kevin Gallagher, Ramon Espinasa, and Dylon Robbins. What we want to do here is, and I should note this, two more things while they take up their seats. We usually do the task force around a table, and that's what all of these people are going to do tomorrow. But we thought that this topic had a wider appeal, that it would benefit from having a more public discourse, so that the members of the task force can also get input from that. And what we want to do, and what we've asked our panelists to kindly help us with, is to keep their remarks fairly short. We have 4 speakers in this panel. They have all contributed short papers. We want to keep the remarks short and then have a really fruitful discussion. As was mentioned, the first panel is going to focus on development issues writ large. The idea is to think about the drivers of what Latin America's futures might be. It is less to figure out what will happen in 2060. If any of you know, please let us know too. But the idea is that if indeed we were taking 2060 seriously, what are the things that we should be thinking about today that have a long-term footprint, that have the long-term drive to do that? Our first speaker is Helwege. Anne is a colleague here at Boston University at the Department of International Relations, a friend of the Pardee Center. She also is associated with the Global Development and Environment GDE. Institute at Tufts University, and she's going to look at the issue of development and what are some of its drivers. So Anne, I'll start directly with you.
Elaine, I'm going to need help just getting to this. Okay, so Carlos and Scott asked me, could I please talk about what makes development happen? And I didn't say, are you crazy? But I have changed the topic a little bit to, is it happening in Latin America? Okay, so what is development? We all agree that growth GDP growth is not development. So just to kind of a very fuzzy topic, but just what are some of the components that the kind of SEN-like capabilities would lay out? Opportunities for democratic participation, less vulnerability to natural, like earthquakes, wars, and economic calamities, social inclusion of marginalized groups, so a little less inequality, sustainable resource use. We're looking forward to the environment discussion, so we've got some upcoming discussions about politics. And then just generally lifestyles that are healthy, productive, and pleasurable. If you read the development literature and the SEN stuff, sometimes this phrase, to be a person, shows up, whatever that means. And for economists, it's like, give us some measurable characteristics. So we tend to look at income levels, education levels, maternal and infant mortality, violence, inequality, poverty rates. Those are pretty typical development indicators. If you look in Latin America at infant mortality rates, it's astonishing. I mean, this is really, I know it just looks like a table, but it's really one of the most beautiful pictures of the 20th century, if you ask me. Because in every single country in Latin America, infant mortality has dropped drastically. I mean, this is long-term progress. I think, we'll look back on that and read, but other people look back on that in 100 years and say that's a really big deal. And this is also a big deal. Thank you. And this is also a big deal. Maternal mortality has come down radically in the area. So you can see every single country by roughly half. Okay. Major progress. Homicide rates are a bit of a mixed bag, and particularly Central American countries have really struggled. We know that. We read about Mexico every day, although Mexico is actually not the country with the big trouble. But even Brazil still has not solved that problem. Okay, so back to the question of what is development. I want to focus on only one issue. Just being an economist, I want to focus on vulnerability to economic calamities. Okay. There's a lot of talk right now about how booming Latin America is. Scorching, all these interesting adjectives. GDP growth for the region in 2010 is predicted at 5%. Brazil, Peru, Argentina, the World Bank says over 7%. And we're not just talking about a recovery from the crash. 2004 to 2008, average growth was 4% per year. When you compare that to the 1980s, the 1990s, and even the early 2000s, more typically 2%, this is really pretty amazing. Right? So here's a World Bank study that just came out titled Globalized, Resilient, Dynamic. The World Bank argues that the region is in terrific shape because it has improved macroeconomic and financial frameworks, strong currencies, countercyclical fiscal policies, better integration into global and financial markets, less reliant on external debt, diversification of its trade structures, it's way less dependent on Europe, Japan, and the United States. Latin America is taking off, and there's one study after another like this. If you look at the poverty rates in Latin America, and you can argue about whether $2 a day is the right poverty rate, but if you look at this data, throughout the region, there are radically lower poverty rates within this decade. Nice story, really nice. Okay? Lots of positive change then. Every single country is down, and down a lot. Okay, okay, so what's going on? Well, it's mostly an export boom. So looking at these growth rates of exports, these are astonishing. These look like Asian growth rates. Exports are growing really, really fast. I know it's a lot of data all up there at once, but the basic punchline, very, very fast export growth, which leads people to say Latin America is in a very different place than it has been historically. This time is different. Okay? And I want to raise the question of, is it? So if we look at mineral prices at the end of 2009 Copper prices, 4 times what they were in 2001. Tin prices, 4 times. Gold, 4 times. Actually, it's probably higher than that now. Even iron is double what it was in 2001. Okay? And soybean prices are twice what they were historically. With the World Bank, this is a World Bank picture. The World Bank saying this is great. We're taking off. And the reason for this great takeoff is China, 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 China. I knew you would love it. So it's a terrific, if you're interested in this topic, go read Kevin's book. I put the cover up. According to IDB, trade between China and Latin America grew at 31% per year between 2000 and 2008. That's astonishing growth. And people are talking about a super cycle that, you know, this is not just a little bubble, but it's China. And so it's for the next, it's till 2060. We're going to forecast here till 2060. Okay. Almost all of this is happening in the Southern Cone, I should say. And Kevin can talk more about this. Okay, so the question is, will these high commodity prices hold? Okay. And I could talk about this at length, but I'm just going to kind of give a quick little rundown on some of the really big commodities. Gold. Why is gold doing so well? Gold is doing so well in part because of fears about the U.S. recession, because of fears about inflation, because of changing currency alignment as world trade changes. If gold were to return to 2005 levels, and if you think back to that chart, 2005 was a really good year for gold. Peru's exports would drop by 1/3. Okay? Or gold and copper, if they both were to do that. Iron reserves. Iron is everywhere, and China produces half of global output. Brazil, one of the big booming commodities is iron. Brazil only accounts for 15% of global iron output. It does have Vale, which is the big iron company, but it doesn't control that market. Okay? Soy, who's the big producer of soy? We are, and we have been growing really fast in soy, particularly as we're no longer putting our land into corn. And Embrapa has done the nice, and Monsanto have created tropical seeds that may, in a couple of decades, give Africa a run at this. And then finally, oil. Oil is a big conversation topic. We can talk about it more later. But if we're looking long run, there is that little problem of climate change. There is growing use of nuclear. Natural gases we're finding more and more natural gas. Brazil has made these major finds, Tupi and Libra finds, but they are 18,000 feet under the sea, high costs, lots of questions, and even then that raises questions of what would that do to other oil producers in the area. So we see Dutch disease throughout the region. Dutch disease is a kind of classic case of high commodity prices lead to lots of foreign currency coming in, chased down by portfolio investments, new foreign investment in these booming commodities, appreciating exchange rates, and of course forget about being able to produce other kinds of exports. Export diversification becomes really difficult when you've got a commodity boom. Currencies become too strong, and if you look at this table here, currencies have radically strengthened in the region right across the board. Just look at 2009 compared to, say, 2004. Right across the board, currencies are getting strong. Too strong, I would argue. Okay, so some of you have heard the accelerator principle in macroeconomics. There is also a thing called a decelerator principle, which is once investment stops flowing into the region, and you don't necessarily need a slump, all you need is slower growth. Accelerator principle and deceleration are all about the first derivative. Once you wind up with less growth, you wind up with less foreign exchange coming in on the investment side. That tends to reduce aggregate demand. Boy, is this ever a familiar unwinding story in Latin America. Very pessimistic, view would be to say, look, there's a lot of global liquidity out there. That global liquidity is caused by incredibly low U.S. interest rates. Everybody's looking for yield, excess savings in China, very slow European growth, speculation in gold. That stuff, all of that can unwind. Okay? So we've got the IMF with the World Bank saying, oh, but Latin America is advancing with strength. And it is true that the external debts in Latin America are way lower than they've been historically. Way, way lower. So it's like, yeah, okay, so, but at least this time we're no way we're going into the debt crisis again. Okay. Except that domestic debts are still pretty big. Don't worry, we're the ones that produce the pesos, or we're the ones that produce the rice. Well, how does this stuff unwind? Just a quick economist perspective here. Local currency debt is not immune to speculative attacks. Okay? All it takes is a loss of confidence. You wind up with people trying to sell their locally denominated bonds, get their dollars, and get out. We saw that with the tesobanos in Mexico in the early 90s. Another point of vulnerability. Financial sector, you're hoping that the regulators can anticipate risk before it happens. We've been there with our own crisis in the last 2 years. Banking regulators cannot predict whether the assets are solid or not. How strong is that asset? And then Latin America has generally failed to engage in genuine tax reform. Scott was just saying the same number. Peru, for example, depends on minerals for 11% of its tax revenue. It used to depend on it for 4%. So here's a quote from Baca: the idea of tax reform has vanished from the public agenda. Okay, so we have the question of, is there a soft landing or a hard landing coming in the region? I don't know. Okay. But we do also have the question, and I will run really quickly through this, is this a good development strategy anyway? Okay, so urban poverty is down, people have jobs, they have jobs in construction, they have jobs as maids in the houses of people who are benefiting from this boom. There are CCTs, conditional cash transfers, in every single country in Latin America except for Venezuela. 93 million people in Latin America benefit from welfare payments. Okay, very nice, more security, except that's also saying 93 million people in Latin America do not have the ability to make their own living. All right? Okay, and the rural poor in particular are left out of this picture. If you look at the northeast of Brazil, the poverty rate has come down very little. It's come down in the rest of Brazil, but northeast of Brazil is still struggling. Why? The jobs in mining, the jobs in soy are super capital intensive. Okay, so we see output in soy going up, 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 jobs in soy going down, 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 down. Okay, it doesn't look like a lot of people are working on that farm there. That is actually a picture of a Brazilian soy farm. Okay, and if you look at, if you look at welfare in the northeast of Brazil, you say, well, hey, it looks like people are better off. Absolutely, they're better off. But that increase in income is not coming from agriculture. The share of income attributable to agriculture has fallen. It's actually fallen in absolute values. What's really keeping people together are the welfare payments. Social Security accounts for a much larger share of northeastern income than it did in the past. Okay? You see jobs and people disappearing from the rural sector. Rural poverty is still an issue, and there's a question of, so what are these people going to do? Which does bring us to questions about how do you develop, how do you incorporate the poor into what we would call genuine development? For Brazil, for the whole region, Brazil's average, adults over 25 years old have only 6 2/3 years of schooling. That's the whole adult population. Less than 12% of the population has completed high school. In Mexico, if you look just at the poor population, 89% have no more than a primary education. So what's to be done? I don't have an answer to that. I have a couple of ideas. This is my last slide. Stabilization funds. Everybody talks about, why don't you do what Chile does? Why don't you do what Chile does? Let me just say very quickly, that is a savings account. If you asked me, how can I make a living? And you said, put money in savings, like I still need a career, right? Well, we have the comparable here. You still need to figure out how to develop long-run growth. And Chile has extremely low poverty. Other countries have a lot more tension of what about solving current poverty today? Easier for Chile because there is less poverty to deal with. Export diversification into fish, fruit, wines, whatever. Great, except for there's the currency appreciation problem. Raise labor productivity in order to counteract the effect of relatively high wages in Latin America. That would mean better formal education, better training, and better infrastructure. Another hot phrase is move up the value chain. Instead of selling soybeans, sell animal feed or meat. Instead of selling copper, sell the pipes. And that's kind of the old Albert Hirschman backward-forward linkages, like, yeah, great, we couldn't figure that out 30 years ago, we still can't figure it out, except that there are some very practical steps, like figuring out how to get into that Chinese fruit market, how to get into the Chinese meat market. Latin American countries have not succeeded in breaking the phytosanitary rules in China, and Kevin may be talking more about that. Are there services that are not just dependent upon the export boom? Are there services that can help close the current account deficit, like oil services to Africa, or, for example, financial services to the rest of Latin America? And then finally, I'll say Latin America has to resolve its ethnic and racial tension, because everybody gets along really well when the economy is booming and not so well when it's not. And if you looked at BBC today, there is an Argentinian senator slaps the face of another senator. So, oopsie, doesn't sound so good. Okay, so.
Thank you. Why don't you go ahead?
Sorry.
No, go
I
ahead.
thought we were going on.
Can I just, Kevin is our next speaker. Kevin is from the Department of International Relations. He's also at G-Day. He's a faculty fellow at the Pardee Center. His book has already been plugged. Please do read it. And if you want to read a shorter version of it, there's a Pardee paper that's based on it, which is sitting outside. I shall also note, both for Kevin and everyone else, please do use the mic. It will do nothing to the sound, but it is needed for the recording so that you will be captured for all posterity.
Oh, okay. Well, thanks for asking me to come, Carlos and Scott and Adel as well. I should say, thinking about, they asked me to talk about China and Latin America, thinking about Latin America 2060, and simple for me to do on one end because, as my manager just plugged, I have a book on it. But I should say I give this presentation with a little bit of unease. I mean, if this conference was 10 years ago, someone else, not me, would be asked to do Japan in Latin America. 10, 15 years ago, Japan was the new Asian adventure in Latin America that everyone wanted to talk about and everyone was concerned about. And now you look at the statistics of trade and investment, and Japan is very happily number 1, number 2, number 3, number 4 for most Latin American countries, and nobody talks about them anymore. They love the Japanese market, they love the Japanese investment, and it isn't that much of a concern. And so, to what extent will the China situation be like that in another 10 years? One doesn't know. It might just all this interest in China, to a certain extent, could just be the latest fad because it is new. So I just want to say that with a caveat. I'm going to make 4 points. One that I'm going to talk about the first 10 years, because I really do feel like the past 10 years in the Latin America-China relationship on an economic level are super new and transforming, and then I'll start to think about 50 years from now. So for South America, as Ann said, over the past 10 years, Latin American trade with China has had incredible benefits. As Ann mentioned, it's been a new export market for Latin American commodities. It's the Chinese demand for all those commodities has also boosted the global prices of all these commodities, so Latin Americans get better prices for all their commodities when they sell to Australia, to the United States, and elsewhere. It's also been welfare enhancing or caused economic growth because most Latin American countries have trade deficits with the Chinese and import a lot of light manufacturers from which they get a lower price, and that contributes to welfare welfare benefits as well. There are some costs that I want to talk about for the longer run. The problems of job creation, I'll mention in the last presentation, environmental degradation, and questions surrounding the resource curse or Dutch disease. And the dragon in the room, the title of my book, sorry to plug, is that one of the longer run concerns that the Latin Americans need to be concerned about vis-a-vis China is the extent to which China is outcompeting the Latin Americans in world markets for some of the industries where they are diversified right now. I'm going to try to end optimistically, though, and say that Latin America has some interesting indigenous policies that they've discovered themselves over the past few years that could be bolstered, and they can learn and leverage a lot from China to address some of these longer run concerns. So over the past 10 years, Latin American trade with China has, exports have increased by a factor of 10. In 2005 dollars, it was about $42 billion. In 2009, it's estimated to go well over 50 for 2010. It's about 7% of all Latin American exports and 25% of all China's commodity exports. Whoops, how do I go backwards? Here we go. Here's a list of China's rank as a trading partner for selected countries for 2000 and 2008. If you look for 2000, most countries, China, except for the case of Peru and Uruguay, China was not a significant trading partner. Now it's the number one, number two trading partner for almost all of the Latin American economies, or many of the Latin American economies. When you add all this up, though, it's really just a handful of sectors and a handful of countries, almost all of them in South America, that are the key beneficiaries of the Latin American export boom. It's really oil, soybeans, iron, and copper. And that's really just Chile, Peru, Brazil, and Argentina as the major countries that are really benefiting in the short term from trade with China. This is hard to read. This just shows that over the past 10 years, there's been an incredible amount of trade with China. Over the past 5 years, there's been an incredible amount of foreign investment from China to Latin America. This is hard to read, but let me just note that the vast majority of the $25 billion worth of foreign investment that's come from China over the past 5 or 7 years, it's in these same sectors: copper, oil, iron, and soybeans. This is where the majority of that foreign investment is going as well. In Central America and in Mexico, it's a different story. Those countries don't have as many of the primary commodities, and they are countries that have been trying to integrate into the world economy based on low-skilled work. And those countries are having a real hard time competing with China for U.S. markets and elsewhere. This just shows textiles and apparel for Central American countries. Without the Central American Free Trade Agreement, this would probably be even worse, but even with the Central American Free Trade Agreement, which creates a protectionist rules of origin that make a certain amount of Central American and U.S. trade have to be in apparels and textile. Even with those measures, exports from Central America in textiles and apparel to the United States have gone down, and China, with its entry into the WTO and the loss of the multi-fiber agreement, has just skyrocketed. Mexico is a similar story. In the year 2000, if you look at high tech, the majority of Mexico's exports to the United States in manufacturing are in autos and electronics. It used to be autos, electronics, and textiles. Almost all that textiles has gone to China. And here's a picture of electronics. Just one example for the presentation. Look at computers. In the year 2000, the Chinese had 6% of the U.S. market in computers, and Mexico had 4.5%, so relatively the same. By 2009, half the computers purchased in the United States are from China, and 3.6 from Mexico. Mexico's losing their market share. So that's the past 10 years. The past 10 years has been highly beneficial from an economic growth and export perspective for South America, and very problematic for Central America and Mexico. So what do we think about the long-run future? 3 questions. Will the Chinese demand and the prices continue to rise? We heard this in the last. To what extent will that, if that does occur, to what extent will that accentuate some of these concerns about competitiveness and the resource curse? And what are the longer-run impacts on employment generation and the environment for the region? For the sake of this presentation, I paint some darker pictures in the paper that I wrote because it's hard to tell if China will continue to grow. I mean, lots of folks say, hey, China's going to continue to grow at its current rates forever, but maybe it's like Brazil was from 1950 to 1970. State-led industrialization moved out of coffee into Embraer and some manufacturing, but then it hit a plateau in 1970s, and it's only now perhaps just moving away. We have no way to tell for the next 50 years how China is going to go. I'm going to be rosy for the presentation, but I'm not all rosy in my paper. I tried to do some calculations to try to get a rough estimate about China's demand, and for the purposes of this paper. And for these four commodities, oil, iron, soybeans, and copper, I said, well, how much oil per capita did South Korea consume and Japan and the United States consume at different levels of GDP per capita? And then I map China next to that. And so if you look at South Korea, an East Asian nation that had a similar economic model, similar growth path as China, they started really low, and they're way up here at almost, what do I have here? Yeah, 2/3. Here, and they're about at the same platform as Japan in consumption of oil per capita. If you look at China, they're nowhere near that level. Okay, let's hope nobody gets to this level. This is burning the earth, no matter what the new Congress people say. And so, if you think about this, I do some calculations at China's current growth rates in GDP per capita. They'd reach the South Korea level in 46 years. At a quarter of those growth rates, they'd reach these South Korea, Japan levels in 146 years, at a quarter of China's current growth rate. So if China continues to grow at its current rate or a quarter of its rate, and it mirrors to some extent its East Asian neighbors in terms of consumption per capita of some of these resources, in this particular case, crude oil. If you look at China's trajectory, it looks like it's going up, but it's nowhere near there. So the demand could be there. And this graph looks the same for iron ore. Here's South Korea and Japan for the iron ore. And here's I couldn't get data on copper. I had to pay for it. I didn't want to pay for it. So for South Korea for some reason. But here's Japan and the United States, and looks like a similar trajectory. And so in the paper, I've got calculations on China's current growth rate and a quarter of its growth rate. And for these three commodities, if China continued to grow, the demand would be there for these key commodities from Latin America. Soybeans looks different. Soybeans, China's already hit the soybean consumption per capita that South Korea and Japan have. And so if it is analogous to these other two neighbors, maybe the soybean potential export for the Latin Americans won't be as high. That said, this is the United States here, and the big difference here relative to here is that most of the soybean in the United States goes to is a feed. And it's a feed into a livestock industry. And China is trying to develop a livestock industry. So if right now China, like South Korea and Japan, for the most part, the soybeans are for human consumption and part of the diet. And so if it stays there, maybe it's hit the plateau. If they're successful in creating a livestock industry, there may well be long-term demand for that as well. Hard to tell, but for these four commodities, at least three of the four commodities, the demand could be there. So let's, for the sake of positive argument, say the demand could be there. That could be a great thing. You could have this new diversified export source, but there are also some other concerns that you'd have to deal with. One of them is industrialization and competitiveness. This is another terrible graph to read, but all it does is show the share of a country's manufacturing exports divided by total manufacturing exports in the world economy for a given year. In 1980, only Argentina, I tried to match these with World Cup flags, Only Argentina was among the top 50 countries in international competitiveness by this measure. China was number 99 at 0.00% of the world market. China in 2009, by this measure, has become the most competitive manufacturer in the world, and most Latin American countries are sliding down or struggling to keep their competitiveness, which is a concern. This is a picture of Brazil. These light gray bars right here are Brazilian exports to China, and here is a graph of primary goods exports and the percentage of manufacturing exports started to go down, and they crossed in 2010. In our book, we mimic a calculation done by the Asian Development Bank that tries to determine the extent to which different manufacturing sectors are under threat from China in world markets and in Latin American markets. I'll only present one of the tables here. But if a sector, and we did this for about 10,000 different sectors, this is the summary table. If a sector, in a sector, say in textiles, China is penetrating world markets, and Latin America, a Latin American nation, is decreasing in those world markets, we say that sector is directly threatened by China, if there's a statistically significant correlation there. And if a partial threat is a sector where China is increasing in a sector and a Latin American exporter is increasing but at a slower rate. The punchline here is that 92% of all Latin American manufacturing exports are under some sort of threat from China in world markets, representing 39% of all of their exports. And in countries like Mexico, that's even worse. It's 97% of all their manufacturing exports and 71% of all their exports. In Mexico right now, the only sector that maintains its competitiveness relative to China is the auto sector. That's for two reasons. 3 minutes. That's for two reasons. One, autos are too heavy for the Chinese to send across the Pacific. And two, the North American Free Trade Agreement has this protectionist wrinkle that makes 62% of all of the cars produced in North America, sold in North America, have to be produced. What about jobs in the environment? I have the same table that Ann had, but with more updated data. If you look at soy, you've got increased soy, but fewer jobs. So if you continue along this commodity growth path, where are the jobs going to come for the increasing population in the region? And the environmental concerns are grave as well. These are a couple satellite images from colleagues of ours in the Geography and Environment Department here at BU. If you look at Amazon soy production in 1990, the darker areas are the deforestation. In 2005, that spreads rapidly, and it all spreads here because all the soybeans go out to ports on the Atlantic end. And what the team over at Geography and Environment now are doing are modeling the longer range future here, because there's a number of public works and infrastructure projects to be able to get this to ports in Peru and Ecuador and Bolivia. Bolivia doesn't have any ports. Peru and Ecuador, to be able to sell to the Chinese and create interagency trade. And they estimate that parts of the West will start to look like that as those different infrastructure projects happen. Last slide. So what are some of the lessons for policy? Again, in my paper, I paint some darker possibilities, but I think that the Latin America-China relationship can be a real source of opportunity for the Latin Americans. On the one hand, you may have all these new exports and this increasing demand. Okay, if you are sharp about that and you create more stabilization funds like the Chileans, you have savings for a rainy day. That helps you with macroeconomic stability, but it also frees up the fiscal space to do all sorts of other things in terms of poverty alleviation. But I also think the most important thing is to focus on this export diversification and increasing productivity in the region. And there they can learn from the Chinese. The Chinese are the most successful industrializing globalization nation in the history of the world. What they've been able to do and transform from an agricultural society in the 1950s and 1960s and be the most competitive manufacturer in the world gives a lot of there's a lot of lessons there that the Latin Americans can glean from. The Brazilians, I would argue, are already thinking along those lines with their development bank. They're also leveraging the Chinese in deals on on natural resources. They gave a contract to Brazil for an iron mine only on condition that the Chinese would build a steel plant as well and do it in an environmentally sound manner. They had already shut down 2 Chinese steel possibilities because of environmental issues. And so that's an example of using the Chinese investment opportunity as leveraging for moving up the value chain, creating jobs, and trying to do this in a more environmentally sound manner. I'm getting told that my time is out. If you free up funds, you really need to think about environmental protection, not only for the sake of the environment, but if you want these commodities to be there for those 46 to 146 years, you can't do it without monitoring the environment related to it. And another thing that I think is key for the region is that they need to stick together a little bit more when it comes to global governance. The Latin Americans have paired with the Chinese at the WTO to be a force to get a more balanced global trading system. The coalitions that Latin Americans have been involved with other developing countries at the WTO, I would argue, have been very beneficial for development. However, then they all step away from those coalitions to sign deals with the U.S. and other countries that are going to make it a lot harder to do some of these different deals. Thank you very much.
Thank you. Thank you. Thank you very much. We've had 2 wonderful presentations to get us going. We'll have a third one from Ramon Espinasa. Ramon is teaching at Georgetown University. He is with the InterAmerican Development Bank, but I should note that the bio we have for him in the packet is a little outdated. He now heads the oil and gas section department within the energy division. Ramon, all yours.
Thank you. Thank you very much. Thank you to Pardee Center and to Scott Palmer and Carlos Blanco for their kind invitation for me. It's an honor to be here today. I don't have a formal presentation. I produce a short paper that is in your handout. And the title of the paper is International Integration and Economic Growth in Latin America. And the sequence of presentations have been extremely good because a good deal of the evidence has been already presented by both Anne and Kevin. The first point I want to make is evidence. There has been a quantum leap in the exports of the Latin American region over the last 3 decades. In the Andean countries, exports have increased 4-fold, and there has been a growing degree of specialization in the exports of both raw material and their manufacturers along the energy, the food, and the mineral chains. Then Latin America has been specializing in what already has been said, the production of raw materials and their manufacturers. This is the response of Latin America at the World Division of Labor that has been evolving over the last couple of decades, whereby China, or Asia, and China in particular, have become the big suppliers of labor-intensive manufacturers. And as both Anne first and then Kevin said, Latin America cannot compete with these countries in terms of labor-intensive goods. And the best, this is witnessed, as Kevin said, by the demise of the maquila industry both in Mexico and Central America. Then Latin America has been specializing, given its endowment of natural resources. And the question then is, has it a potential for growth? And my answer to this question in the long term is yes. And the first point I want to make is the acceleration of the world economy between 2004 and 2008 came to an end because of limits to growth in the supply of raw material. It was very much a Malthusian response to growth. Then the growth of Asia that concentrates more than half world population will put increasing demand on the supply of raw materials, and there is a space for Latin America becoming integrated into international trade as supplier of both, again, raw material and adding value along those chains as it has been the case. Then there is a space for growth for Latin America in the long term, in the longer term, following the path it has been taking over the last 2 or 3 decades. However, there is a huge shortcoming, as already has been pointed out, that these sectors are high revenue sectors, high capital intensive, but low employment. Then the big challenge is how to increase the national content of in these sectors, how these sectors can integrate more good qualified labor and national goods and services. And there are 2 factors here to take into account. First, because of the characteristic of these sectors, which are, again, high capital and high technology intensive, they usually are developed by foreign capital. That's on the one hand. On the other, because of the characteristics of the natural resources in Latin America, particularly in mining and oil and gas, the ownership of the resources belongs to the state. Then there is a space there for state action, because the companies developing the resources have to enter into a contractual arrangement with the state. And typically, there are 2 parameters that are discussed in these contracts. One is preserving the environment and safety standards. The second is royalty payment, which is the government take in the output of these sectors. However, there is room for negotiating a third parameter, which is, to me, it's a key factor into all this, which is the national content. Then, as part of the contractual arrangement between the state that owns the natural resource and the companies, either foreign or national companies developing the resources, there is room for negotiating the national value added into the sector. Typically, as it has been the case, these sectors have been developed by foreign companies, and for them has been much easier to rely on the supplies of goods and services and personnel from their home countries, and these industries historically in Latin America have developed as foreign enclaves. However, there is a space now, and this is also aided by the degree of development of the Latin American countries. There is room for increasing the supply of both labor, qualified labor, and goods and services of national origin. Then the state ownership of the mines or oil and gas-bearing lands, forestry, opens again a space for negotiating between the state and the companies the national content. And there is historical experience of best practices in this regard, and one is Norway. Norway, to start with, was not an oil-producing country in the early 1970s when oil was discovered and developed in the North Sea. And Norway developed a very aggressive policy vis-à-vis the foreign oil companies to make sure that there will be an organized program of both technology transfer and training of Norwegian personnel in developing those reservoirs. Nowadays, Norway, 3 decades after, is a world-class exporter of oil-related goods and services and technology. I mean, they are a leading country in the development of offshore deep-sea reservoirs. And that's thank you to a very deliberate policy by the Norwegian state, the Norwegian government, in negotiating those original contracts with the particularly American oil companies for developing the North Sea. Then in this strategy for adding national value added into the raw materials or the primary sectors, there are 3 parties that have to come into an agreement. One is the state, represented by the government as owner of the natural resource. A second one, in most cases, is the foreign oil companies that provide capital and know-how and usually the markets for these raw materials and potential value added along the productive change. And the third party would be the national companies that could eventually provide goods, services, as in the Hirschman tradition, to supply the upstream, but also adding value along those chains. These national companies would be the perceptors, the recipients of the transfer of technology and the transfer of know-how by the foreign companies. But there is room for entering a longer-term strategy between these three parties to develop national value added and create good quality employment in the Latin American countries to deepen down the effects of a strategy based on the development of raw materials. By the way, there is a point I forgot to mention in the potential for growth of these sectors in the mid to longer term, that the reference has always, or on the previous two presentations, made to China. And Asia is larger than China. For one thing, India will overtake China in terms of population in a couple of decades. And that's going to be an actor. And again, Asia is larger than China, and there is a huge potential for growth in Asia beyond China. Then there are best practices worldwide, whereby through state intervention, through the state having a role to play as owner of the natural resources, to create the conditions for the transfer of technology, employment, and know-how to the developing countries. However, and this has proven to be, this is back to the Latin American experience, we have 3 countries that are pursuing very successful policies in this regard. And the 3 of them, at least in the oil sector, have a very similar institutional arrangement. These countries are Brazil, Colombia, and Peru. And the 3 of them have created a non-operating regulatory agency that administers the oil sector to the benefit of the sector as such and to the state-owned company. A good deal of the success of Petrobras, Ecopetrol, and Petroperú is due to the fact that the regulatory agency has, in the last instance, protected the state-owned company from a very interventionist action by their own government. That has not been the case in the 3 countries with the largest reserves, but that are developing the resources through a state monopoly that is continually intervened by government. These countries would be Mexico, Venezuela, and Ecuador. There are best institutional practices for protecting the productive development of the primary sectors to the benefit of the sector itself and the economy as a whole. Then, looking into the future, if there is room for pursuing a growth strategy based on the development of raw material and adding value along those chains, I would say that there are at least 4 sets of institutions or family of institutions that need to be further developed in Latin America or in the Latin American countries. One set of institutions has to do with those institutions that administer and have to do with the development of the natural resource. There are 2 practices in Latin America. One is developing the resource through the state to the state monopoly, and that has been historically the case again in Mexico or Venezuela nowadays, Ecuador. It was previously in Brazil or Colombia, and it is the case in Chile. But there are other practice, or there is another practice that is proving to be a best practice, which is not developing the resource through the state monopoly, but the state delegating the development of the resource into a non-operating regulatory agency. And this is very much, again, the Norwegian model, where through the National Petroleum Directorate, they administered the development of the reserves in the North Sea, and it was copied in Latin America by Brazil first with the Agencia Nacional de Petróleo in 1997, Colombia second, and with the Agencia Nacional de Hidrocarburos in 2005, and previous to that it was developed in Peru with Peru Petro. Then there is this set of institutions that have to do with the development of the resource. There is a second set of institutions that need to be developed in the Latin American countries to be successful in this kind of strategy. And these institutions have to do with those institutions promoting the national value added in the primary sectors. Again, both upstream and along the chains. And these are supra companies and para-government institutions that have to act as an interface between government, companies, foreign companies, and national companies in order to promote a longer term of strategy for adding value along those chains. A third set of institutions that is key for the success of this strategy is institutions that secure property rights. Because contracting in primary sectors, particularly in mineral and oil and gas sectors, is extremely complex, I would say, because of at least 6 reasons. First, the investment is made upfront. Second, and once you're committed, you cannot go back. It's made upfront. Second, it is asset specific. Once you are invest in those sectors, you cannot use those assets for anything else. Third, investments are usually extremely large. Then there is, once you are committed in big amounts. Third or fourth, the recovery period is very large. Then you are committed upfront in large amounts, is asset specific, and the recovery period is long. Then you want to be secure that you will not be expropriated. Fifth is that there are risk, geological risk, at least in oil and gas and mining associated to these sectors. And the sixth and more important reason or set of reasons, because there are a number of them, is that there are rents associated to the production of these goods. And there is the issue of rent distribution between the state owner of the resources and the producing companies. And then there is an inherent tension between the producer and the owner for the distribution of rents. And there is the whole issue of rent nationalism and the call from different quarters in the country for state control, direct control, and expropriation of foreign capital, as it was the case. Then the institutions that would secure or give a sense of security to the investors in their property rights on their investments are key for the development of these sectors. And this is, again, a third family. First is the institutions for the development of the resource. Second is the institutions for promoting the value added, the national value added. Third are the institutions that have to do with property rights. And the fourth set of institutions that were mentioned by Anne are those that have to do with revenue management. These sectors, again, are high revenue, and the rent fluctuates, and that has an effect on the real exchange rate, and in the last instance with real wages, and they may hamper the development of other economic sectors more labor intensive or with lower margins. Then institutions that have to do with revenue management, and it's just two elements there. Those are either stabilization funds or savings funds, which are not the same. Usually they work together, need to be developed to secure the macroeconomic stability of these countries. But again, there is room, and this is very complementary to what both, I believe, Kevin and Anne said. There is room for a strategy based on the development of natural resources, given its large endowment of natural resources in Latin America. Okay, thank you very much.
Thank you. Thank you very much. Another very rich presentation, and we'll move right on to our fourth presenter of the panel, which is Professor Dylon Robbins. Dylon is an assistant professor of Spanish here at Boston University and also head of the Portuguese section, and he'll be talking about the cultural aspects that frame development in Latin America. All yours.
Thank you. Thank you. Just a quick question. Does this microphone feed into the board back there, this little one? Okay.
As long as you're talking into one of the two microphones.
Great. Thank you. First of all, I'd like to thank both Carlos Blanco and Scott Palmer for their invitation. Indeed, this is a challenge for me to participate in this scenario, which is generally one that's formed by concerns of policymakers and social scientists, and myself as a humanist find myself grappling with what can I say in precisely this context. For those reasons, I should begin with two caveats and then a confession. The first caveat is that I'm approaching development from more of a theoretical perspective, and a perspective that is rooted in those that have precisely critiqued development, almost as a cultural construct and as almost a historical paradigm. Namely those well-known critiques of Albert Hirschman, Enrique Cardoso, Emmanuel Wallerstein, Naomi Klein, Eric Wolf, etc. Secondly, I'm working with culture, which it's important to foreground. Culture has less to do with concrete realities and has much more to do with perceptions and prejudices that shape our notion of these realities. So if some of what I say goes against the grain, it's precisely because I'm dealing with a realm that in itself goes against the grain. Culture makes no promise of rendering anything truthfully. It in fact shapes the way that we understand things. And now the confession. I've never been very fond of science fiction or otherwise stories about the future, and millenarian projections have always had an ominous ring for me, for they call upon either the end of times, an Armageddon, a disastrous dystopia, or upon the coming paradise, progress, the end of human suffering, a utopia, a classless society. And both extremes draw upon our deepest fears or our most exalted hopes in creating images of the future that rarely conform to the reality that eventually takes shape. To reflect upon the future is to tap into our imaginations, no matter what the discipline. And the imagination, together with our hopes and fears, can only ever mimic rationality rather than fully realize it. While it has only recently come to light within the social sciences that human beings' rational capacity for decision-making must be appropriately bounded, the human capacity for paradoxical irrationality has been a centerpiece of humanistic discussions for more than at least 2,000 years. This has, of course, been recognized by some of the towering figures of the incipient social sciences. We might mention, for example, Marx's suggestion that the driving force of a rational capitalist market is the deeply irrational phenomenon of commodity fetishism. Or in Freud's implicit suggestion that the structures of the subconscious compulsions shaping our consciousness have found themselves reflected in numerous works of drama and fiction. Indeed, the limits of our ability to quantify and measure human experience and to demand that it conform to a relentless rationality find us turning to the humanities for some insights to those realms of understanding that are heuristic rather than algorithmic, that depart from the humble assertion that some things may simply be unknowable, indefinable, or indeterminate, or that reality will always, sooner or later, render any rationalized model or paradigm obsolete. It is for this reason that as a humanist and as a Latin Americanist, I'm deeply honored by the Pardee Center's invitation to intervene in this interdisciplinary discussion on Latin America in 2060. It is, for me, a particularly provocative and invigorating proposition, not only because it is such a bold and pressing intellectual challenge, but also because it is arguably premised upon the tacit assumption that culture may shape our visions of the future, and not specifically the anthropological notion of culture as kinship bonds or gift-giving, or even the narrowly elitist notion of culture as literature or civilization's venerated masterpieces, but rather as a more inclusive vision shaped, in my case at least, a more inclusive vision of culture that includes an expansive gathering of masterpieces. Expansive gathering of practices, images, words, and concepts, and which is shaped, in my case at least, by the contributions of Latin American philosophical and critical thought, cultural studies, psychoanalysis, and continental social theory. The question at hand is how cultural narratives frame development in Latin America, which has crucial implications for the region in particular, if only for its role in serving as a test case for the limitations and contradictions of developmentalism as the shaping premise of economic and political policies. One of the key premises of the developmentalist vision, as it has been critiqued, this vision of the world is that, and I quote, underdeveloped economies and their accompanying social orders embody the earlier or more primitive stages of the more developed regions of the world. If we examine developmentalism as a cultural artifact, which is in fact my concern here, then it would appear to reiterate a series of prejudices articulated well before its coalescence in the post-war world, and which have been repeated throughout history. That is, that the West holds the copyright on universal history. Its particular periodization has defined the very procedures by which to attain modernity, and that those peripheral regions that do not conform to this periodization are in need of a correcting intervention. Let us recall how certain facets of the Latin American intelligentsia, beginning in the late 1970s, particularly in Brazil, but also in other regions, would question the assumptions driving developmentalism by forwarding the hypothesis that, perhaps, rather than seeing the peripheral regions of the world as embodying the developed world's past and lacking modernization and development, we should identify in the global distribution of wealth, knowledge, and technology a series of structures through which wealthier nations assure their continued prosperity by enforcing the marginalization of other neighbors through trade and lending policies, having a favored currency, aid, and political and military intervention when necessary. We could summarize the dependency theory approach as suggesting that the rules of international commerce have been written to favor certain more powerful and wealthy sectors, and that following those rules assures your continued marginalization. Thus, developmentalism, a theory largely elaborated in the developed world and responding to its conditions, was contested with dependency theory, a notion largely developed in Latin America and responding to the particular material historical concerns in that region. While the relative validity of each is an important and compelling question, it is well beyond the scope of this discussion or my expertise. I mention them here, however, because development is an exceptionally contentious concept in Latin America, and it has both conformed to and reinforced a clear division of attitudes that are in fact culturally inflected. Here I shall touch upon these inflections in an effort to identify some important tensions in Latin American culture and to hypothesize how they may shape visions of the future. Much of the following discussion will revolve around two recent cultural initiatives in Cuba and Brazil that challenge some of the premises of both developmentalism and dependency theory. The first is the Batalla de Ideas initiative launched in the midst of the direst and most challenging years of the Cuban Revolution, or the Cuban government's regimen. And the other is Gilberto Gil's push for liberdade digital, or digital freedom or liberty, while serving as the Minister of Culture in Brazil from 2003 to 2008. Before mentioning these two, however, it is essential to point out some of the limitations of our notion of Latin America, especially considering our concern here with its eventual integration as a region. Even in the present, it is difficult to speak of a regionally compact Latin America. I still grapple with understanding what a patois-speaking Costa Rican from Puerto Limon shares with a Mayan-speaking Quiche from Quetzaltenango, Guatemala. Language alone is an insufficient criterion for making sense of this, so it would seem that it must be an issue of similar historical conditions, which in and of themselves are grossly heterogeneous. Or ultimately, perhaps, it is an issue of geography. But then geography alone already will not suffice in itself. After all, New York is the second largest Puerto Rican or Dominican city. Boston is now Haitian and Brazilian. Miami, beyond being Cuban, is one of the major Latin American metropolises, along with Houston and Los Angeles. For those of us from the southwestern United States, barring, of course, the abominable Arizona, the political boundaries indicated on maps demarcate complex and occasionally violent tensions traversing a series of cultural identifications that finds many English-speaking Anglos in these places sharing, in some cases, as much with their Hispanic neighbors and family members as they do with other English-speaking Anglos in the U.S. Guillermo Gómez Peña has referred to the fourth world of these nationals of migrants and immigrants within the United States that are, in my humble opinion, as American as torte de manzana, or tortillas. If they are not, then I must not be either. If present conditions are any indicator, it is incomprehensible to speak of a Latin America in 2060 that is not in some way materially integrated within the political boundaries of the United States or vice versa. Improvised militias and large metal barriers in the desert notwithstanding. A little more than a century ago, some Latin American intellectuals began to think of the region in Shakespearean terms. While it may seem odd that an English play can capture Latin American cultural tendencies, it is important to focus on it as a work that managed to incite, for whatever reason, a telling and resonant reception among Latin American intellectuals. It commenced with a series of discussions regarding Shakespeare's last work, The Tempest, and it entails an allegorical reading of the play, identifying in each of its characters a personification of differing global entities. The work recounts the travails of the knowledgeable and resourceful magician Prospero, who has been shipwrecked with his daughter Miranda on an uncharted island, deserted, of course, but for two mysterious inhabitants, the noble and loyal Ariel and the subversive and monstrous Caliban, both of whom he manages to enslave by exploiting his superior knowledge of the magical arts to not only shape and control nature, but to seduce and dominate their wills. Part of the Latin American reception of the work identified in Prospero and his wealth of knowledge an allegory for Europe. And Ariel represents those societies that favor and emulate its lessons, while Caliban embodies those barbarous societies that beat down its doors and denigrate its legacy. In its initial articulation, Latin America was associated with Ariel, and the cultural analog of this identification was a Latin American intelligentsia that identified with the cultural and intellectual legacy of Spain, Italy, and particularly France, and which would celebrate only those features of Latin American culture which adhered to this vision, while vigorously and even violently denying those features that were indigenous, African, popular, or rural. This is a tendency that emphasizes the rational pretenses of the Enlightenment, and which rationalized economic marginalization and poverty by celebrating the spiritual and the exalted over the lowly material, which was furthermore in this moment associated with the gluttonous and crass neighbors of the North Americans, and their coarse and unfettered production and consumption. This is, of course, according to the Latin American imaginary of the moment. The United States was seen thus as being embodied in Caliban, according to the then prevailing interpretation of Shakespeare's play. And yet the experience of the 1960s in Latin America will shift the vision of things for some members of the intelligentsia who will begin to see in the figure of Caliban, and not Ariel, the pan-third worldist embodiment of resistance to domination, and see contrarily in Ariel a notion of accepting subservience. According to these more recent readings, Caliban captures that side of Latin American self that is subversive and deviant. He defies norms and questions authority. He shows disregard for the rights of property and the rule of law. He profanes the sacred. For his most recent interpretation, the Barbudos of the Sierra Maestra were Calibanesque in their scope and vision. And yet we may identify as well a long history of Calibanesque rule breakers in Latin America and the Caribbean who have captured the imaginations and creative impulses of many. Beyond the guerrillero, there is also the smuggler, the pirate, the counterfeiter, the trickster, Eshuelegba, the maroon, the malandro, Atahualpa, Toussaint, Macunaíma, Garrincha, Lampião, and Maria Bonita. Pancho Villa, the bandit, the bandolero, the tanguero pimp, the squatter, the graffiti artist or bomber, the hacker, Maradona's hand of God, or any of the other icons of subversion and sabotage that embody a local response to Prospero's imposed rationale, a rationale that always justified the reigning order of things. While not all-encompassing or entirely representative, both notions are alive and well in Latin American cultural production and critical thought in varying degrees and alterations. They are locked in an intimate embrace of mutual disdain and dependence, and in gross and inaccurate ways serve as metaphors for differing attitudes regarding how the relationship between the region and other parts of the world can be imagined. To think about cultural narratives that may shape notions of development for the next 50 years is to grapple with this opposition, whose contradiction embodies arguably, in very rough and imprecise terms, the tension that we may also identify in certain measures between the ideology of developmentalism and that of dependency theory as cultural artifacts. Ariel, in gross terms, is a developmentalist, and Caliban is a champion of dependency theory. In paradoxical ways, part of the Cuban government's response to the duress of the latter half of the special period was aerialist in spirit. It was called the Batalla de Ideas, or the Battle of Ideas. Launched in 2000, it answered in part a plummeting daily per capita calorie intake, gross structural unemployment, rolling blackouts, and a transportation crisis with a very particular type of cultural agenda that multiplied classroom contact hours and further universalized education. It also waged a campaign of cultural uplift among the general population through educational television shows on the fine arts, opera, and classical music, including as well dirt cheap editions of great literary masterpieces. Among those, works like those of Chateaubriand and similar authors that ironically were originally removed from the National Library and pulped during the Quinquenio Gris of the 1970s. Implicit in the cultural campaign is the assumption that works of high culture can somehow compensate for material deficiencies. It does not take a literary scholar to recognize in this rationale a 19th century notion of culture that is perplexingly conservative and out of step with the aims of a popular revolution. It also does not take a Marxist to recognize an implementation of a cultural policy in the Batalla de Ideas that speaks of diversion and distraction, or even of the ideological obfuscation of real historical conditions. There is, after all, something frighteningly anachronical and non sequitur in the Batalla de Ideas, whose grandiose slogans and gestures provoked so many sly and incredulous responses from Cubans who have developed an artful skill of fashioning oblique and humorous critiques. Among them, Arturo Infante's independently produced short film, Utopia, of 2004. It was in the midst of the Batalla de Ideas, finally, that I would have one of the more poignant chance encounters in Cuba. I'd come upon a pile of discarded materials in the middle of a Havana street. There, among dust and fragments of brick, some dried underbrush, and otherwise unsalvageable refuse, was a discarded paperback edition of the 18th Brumaire, Marx's famous reflection on historical change. No? Its cover torn and his title page plainly visible. History had repeated itself, and so many hungry, desperate, intriguingly inventive, and relentlessly humorous Cubans had made sure that it was going to be a farce this time, but such that they would be the ones laughing and not me. One of the more interesting aspects of Gilberto Gil's cultural policy while serving as the Brazilian Minister of Culture did not involve popular music, education, or literacy. It addressed changing notions of copyright, intellectual property, and access to information in a digital age. It was called Liberdade Digital, or digital liberty, and it tapped into an ongoing challenge issuing forth from Latin America to traditional liberal notions of property. His discourse, while not entirely his, it is, after all, a provocative test of conventional notions of intellectual property both in theory and practice, asserts very transparently that the reigning models of intellectual property are rooted in a mechanical technology of diffusion and distribution that is being steadily superseded by a digital one that has the potentiality to be more radically dynamic and accessible than the older one. This has been a revolution in information technology, and the Ancien Regime's model of intellectual property, while sustaining a lucrative business model in many of our careers, is archaic and undemocratic. Access to information is the new inalienable right, according to Gilles, and several others that support him, and the software to do so should belong to no one. His support for Liberdade Digital reminds us how notions of property are culturally specific and anything but universally applicable. It also reverberates with the Calibanesque spirit that has ebbed and flowed through other regions in Latin America, and which pulses vibrantly like so many Brazilian hackers and software pirates, filling the urban flea markets with affordable mainstream software, so that they may laugh in the face of the law that tries to make them too poor to access the world of information at their fingertips. The challenge of the future is not how to stop them, control them, keep them in check, or make them conform, obey, and respect, but in how to confide in their improvisational skill, to admire those Calibans that say no, to sympathize with our Ariels that have said yes, to learn from their vision, and to let them lead from there and not us from here. Finally, the new challenge will be as regions of Latin America move into more prominent roles of regional and global leadership is to manage that Calibanesque dimension of the Latin American self. After all, Caliban is a great face to show to power, but it's the worst face power could ever show. Thank you.
Thank you very much, Dylon. We have had 4 wonderful and wonderfully rich presentations. We have about a little more than 15 minutes for question and answers. If the panel would indulge me, may I ask that we take a bunch of questions and then come at the end to the panel, and if you can take notes of the questions that you might want to respond to. I think I also owe an apology to Professor Royett, whose name we have inverted up here, the first and the last name. Now that I've mentioned it, everyone realizes our mistake. We got it right in the print. Got it right in the print, but I think we put the wrong picture up here. My apologies for that. Meanwhile, let's take questions. Please raise your hand, say who you are. We'll start with right up here with Professor Rubin.
Thanks. I'm Jeff Rubin in the History Department and the Institute for the Study of Institute on Culture, Religion, and World Affairs here at BU. I had a question directly for Anne and indirectly for others, including Kevin. I really appreciated your presentation. As a non-economist, whenever I hear all the excitement of economic success and the extrapolations into the future, I always wonder where the next crisis is going to come from. And I felt like you're setting out the sort of economic vulnerabilities, education vulnerabilities, and race, ethnicity, and inequality vulnerabilities gave me the kind of tools I need to think about that. I'd suggest that we're in a moment politically when, if ever, kinds of new reforms may be possible, or imaginable at least, in the areas of risk that you're setting out and in the ones that Kevin and others set out as well. There are, with all due and important caveats, functioning and enduring democracies in Latin America. There are potentially both private sector actors, state actors, and social movement or class-based poor people's actors that are in a more pragmatic mode at the moment. What reforms that you might imagine could potentially bring about a softer rather than a harder landing? What would you hope to see in public debate and in the political sphere that might address some of these issues at a moment before, quote unquote, it's too late?
Thank you. We'll take a few more. We have a question back there and one there. We'll start with the gentleman here. Please do introduce yourself.
I am Amos Irwin from the Fletcher School of Law and Diplomacy. And my question is, we all agree that Latin America can improve by adding value, by increasing the diversification and the value adding in its manufacturing sectors. And I'm wondering, to what extent is this already happening? So we talked about the employment loss from the soybean industry. Have Latin American firms been able to capture any of the, this new soy technology? And also, what are the prospects for technology transfer? When you're talking about Chinese companies moving into Latin America and manufacturing, is there technology transfer that Latin America can benefit from?
Okay. Dr. Thorhog?
Anitra Thorhog, Yale University. I have 2 questions. One is to Anne about the vulnerabilities. And it seems to me that there's going to be an increased vulnerability in northern Central America with the high growth rates, which in the next 50 years will be 100% to 131% of the countries, as well as in the poorer Andean nations, where growth rates are almost that high, 70 to
And you mean the population growth rates?
98% population. And this may promulgate high vulnerabilities, even though the industrialized countries, Chile, Argentina, Brazil, Colombia, Venezuela, Mexico, will be much less vulnerable because they have brought down their population growth tremendously. And to Kevin, I ask why the commodity of fish, which, according to Daniel Pauly from the University of British Columbia, there won't be any fish left in the Pacific Ocean worth catching 50 years from now. Why the commodity of fish has been left out, because it is being strip mined by the factory ships of China throughout the Pacific Ocean, with frequently the blessing of Chile, Peru, Ecuador, Mexico, and their ministers. I just wondered why you elided that one very important commodity to the rest of us.
Thank you. Thank you. We'll take one more. We'll take two more. Pablo and then Sylvia.
Hi, I'm Pablo Suarez, a fellow at the Pardee Center and also with the Red Crescent Climate Center. I liked the image of Caliban as a Latin American, all this image of the allegedly primitive, the finger pointing, and yet many have an image of Latin America as belonging to the highest place in the podium, not just in soccer, but also in many other things. And I wanted to pick up on Kevin's comment about the global governance and the possibility for a different kind of standing, which is already manifesting itself in the G20, Argentina and Brazil standing up and saying, now it's a different game. How do you envision the relationship between Latin America and the least developed places of the world, Africa? We know that Lula has been very active in trying to get closer not only to Angola and Mozambique, but also to other places. Can Latin America do something for development, for global development, thinking not only on China as a client, but also on the poorest as a part of the world that deserves to be helped or supported?
Folks, I know your list is long. Can we take one more? Kevin and company? Can we take one more question before we come to you? Okay, Sylvia?
Yeah. Hello, I'm Sylvia Inclán. I am a professor at UNAM in Mexico. My question is related to this question of how to increase the regions or the national content or value added. And I would like to know if it is already taking place, if rules of origin are being changed, or if there is at least a regional effort to change that. It struck me that the figures for the textile industry, that it struck me that it turned out so bad after the rules of origin were supposed to be protecting those industries. So I was wondering whether there is something going on.
Let me come to the panel, and if I might, Ramon, if I can also add a question for Ramon. I want to make sure he hears me. So Ramon, if I can also add a question to all of these and then come back to you. I was struck by your comment that Asia is bigger than China. And you referred to India. It seems to me that there may be other parts of Asia, the South Koreas, even the Vietnams, that may actually impact Latin America in ways of being competitors. And I was also struck, and this we've been struck in our Africa work as well as in our South-South work, that China always comes up, but somehow the missing player is Europe very much, and even the US, although US came up here. So a lot of things here. Please take any of them in whatever order you want. Don't try to answer all the questions.
On the order that we just
Okay, and I'll try to be quick. Jeff, thank you for that question of how do we move forward, especially in good times. It's a little easier to make progress than in hard times. So what would be some of the priorities? First is tax reform. Jorge Castañeda said to me once when I said, Jorge, how come you're never talking about tax reform? He said, well, you don't put a beret on your head and a cigar in your mouth and start talking about tax reform unless you're an economist. That doesn't get people charged. But in fact, that would help to secure the basis. If you're going to have to do CCTs and pay for education, how are you going to pay for it? You can try to negotiate with the mining companies, but that kind of presumes that this boom keeps going. Smarter, I would argue, is establish a secure, progressive tax system. That's been low on the priorities. I would say that has to be high. People are talking about education. That is already happening. Certainly, this is, in any time you give a talk, you tend to lean a little bit toward one side and get a little bit toward hyperbole. Certainly, there has been technology transfer. There has been new soy technology. In fact, Brazil is producing some of that new soy technology themselves. I have to say the thing that makes me particularly concerned is how do you take that very large, extremely poor, uneducated population and pull them into what is a pretty capital-intensive process? And I would say not enough of that is happening. I skipped over discussion of Mexico and Central America. My whole talk was really about South America. So, and I think Kevin hit that pretty well. And in terms of domestic content, Kevin will talk, I think, about manufacturing in Mexico and the NAFTA domestic content issues. But this question of how do you insist upon greater domestic content when you're negotiating with the mining companies or the oil companies, you can do some of that, but can you pull these people who have sixth grade education, can you create jobs? And the mining companies are like, yeah, sure, and they hire in people to sweep the floors, but they're not really, the gap is so big on that skill ladder that many of the poor people in the Andes simply cannot move themselves up that skill ladder to actually be running that fairly advanced technology. So I'll stop there, let Kevin go.
Lots of things. First with Adel, I mean, I'm old enough to remember, I read the New York Times that morning when the Japanese bought Rockefeller Center and everyone said, oh my gosh, the Japanese are taking over the U.S. Next day's article was, the Dutch own all of the United States. And so, yeah, like I said in the very beginning, that China's just a new thing to look at because they're new and because they're different. But the United States is the biggest investor and biggest trader with Central America and Mexico. Europe has the biggest presence in South America to a certain extent, and other Asians that the South Koreans and the Japanese still have a much larger presence than the Chinese do. So that's a really, a caveat that I wanted to say in the beginning and that I totally agree with. And there's lots of great work on Japan and Latin America. It's tapered off, but they're a bigger presence now than they've ever been. On Jeff's point about democracy and to link it to Dylon's presentation, what's great about the past 10 years in Latin America is that this battle of ideas is now in front of us, right? It's actually can be talked about in elections, with the exception of the abortion issue. The Brazilian election, the discourse in the Brazilian election made our elections on November 2nd look just juvenile. And these debates about economic policy, about what development are parts of the platforms of political parties, and they're not in veiled literature that you have to have a degree to be able to understand that they're actually against the authoritarian state. And so this is a great time for the region because there's a great interplay of ideas, and among these ideas, to segue to Amos's point, is an idea of what is the proper role of the state in economic affairs. And this is in a region that already played a heavy role of the state in economic affairs from 1930s until the early 1980s, and with all due respect, didn't do a great job at it. And so it's a fruitful discussion. One question is, to what extent is upgrading already happening? There's lots of examples, great case studies. The IDB has a great book on upgrading of different sectors and different companies. Couple of them that are important are Chilean salmon. The Chilean salmon was incubated by the Chilean government, created the industry, and then sold it off when it was ready, and now is one of the biggest powerhouses. That said, because the Chileans, if you read the innovation literature and the state and economic development literature, that's seen as a big success story, the salmon farms and so forth, but because they neglected the environmental component, the entire sector is in jeopardy, and that's now become a real important sector for Chile. The same story could be told about the great success story of diversification away from oil in Brazil towards ethanol, also with the neglect of the environmental component that failed failed to be addressed. The soya in Argentina has much more of a developed value chain than it does in Brazil. Brazil's examples, obviously, of aerospace are huge, and what they're doing in the oil sector is much more technologically sophisticated. It involves many more Brazilian firms up the value chain than you'll find in Mexico or even in the U.S. to a certain extent. On fisheries, short presentation, I was just saying that there's 4 commodities that are 80% of all the Latin American exports that go to China. That said, Chilean fish meal, 77% of all the fish meal that China imports is from Chile. And so they are a new draw on commodities and that rely on ecosystems to support them. And I hope one of my punchlines was that if this is your source of growth and you're not thinking about the environmental component of it, there is no 2060. And so I'm sorry I didn't mention fisheries specifically. If I looked at each country for Chile and Peru, like you said, that's a specific thing.
Pretending it's not a natural resource, and yet it's being taken.
Interesting.
And they're not getting any money for it.
The last 2 comments that I was asked are global governance and trade deals and so forth, and what about Africa? I think this is related to the point about energy too. There's been so many pendulum swings in Latin America that I think for the longer run future it's bootstrapped some of the countries. They were so state-led and it didn't work so well, and they had these financial crises. And then they swung into free market fundamentalism. There are many countries, and many of them signed trade deals with our country, with the U.S., which makes it very difficult to do many of these diversifications. And if you look at the countries that are doing a better job, it's the countries that don't have the intellectual property rules that the U.S. Requires that their countries to have, the investment rules, and so forth. That said, the rules of origin, even though this graph that I showed for Central America shows textile exports going down after CAFTA, I would argue that without CAFTA it would have been worse, and Mexico's the counterfactual. Mexico has rules of origin for autos, and so it still has an auto sector, but it doesn't have a textile sector anymore. And in the 1990s, there were all these articles about how Mexico is the blue jean capital of the world, and all the blue jeans come from Mexico anymore. It's hard to find too many textiles industries in Mexico anymore. Same thing with Central America. That graph would have been worse without CAFTA. I'm not saying CAFTA is a great agreement. I think there's fundamental problems with it. But on that level, without CAFTA, the Central Americans might not have any leg in the U.S. market. Yeah, I'll talk to you about global governance afterwards because I don't want to take up other people's time.
Thank you. Ramon.
Just 2 questions of the questions. One by Amis. It is happening, and besides what Kevin just said, there is a good piece of work by the Andean Development Corporation, it's in Spanish, El Descubrimiento de Nuevas Actividades en América Latina, where they do a very detailed analysis of the mushrooming of clusters in these different sectors in different countries in Latin America. And there are at least 115 products that were related to primary sector, downstream from primary sectors that were not present in output 20 years ago, now are present and are related. And then you have, besides the ones mentioned by Kevin, you have the food industry in Peru, which is quite sophisticated, and then all developments in petrochemicals, which are downstream from gas. And so on in steel also, then it is happening. And related to that question, the question by Sylvia, is it taking place, the active policies to increase value added? Brazil is at the lead. They have and with they are becoming even more aggressive with the potential development of the pre-sold, but they have a huge program for identifying the gaps and filling the gaps in human resources. It's called PROMIMP, and it's nationwide, and it implies tens of thousands of employments. And they want to make sure that the bulk of new employment for the development of these potential oil resources is from Brazil. And another example with the same case, they need, I believe it is 49 deep sea platforms for development. They want at least 45 of those platforms to be built in Brazil. Then there are Brazil, for one thing, has taken the lead. But there is a case in Chile, Argentina, with the food and the wine industries, where there is very active role by the state or state-related institutions in promoting knowledge and national value added. A lot needs to be done, but we have experience in Latin America, best practices in Latin America where to learn from. I was working, but they were overwhelmed by other problems with Pemex in developing a value-added program last year. There is this consciousness that there is a lot to be gained from having more active policies in developing the natural resources. And a very final comment. When I said that China Asia is larger than China, I was not referring just to the supply side, but also to the demand side. There is a huge potential for the demand of raw materials from these countries with very little endowment of natural resources. Okay.
Thank you. Dylon, last word.
I really don't have much to add other than my interest in this figure of Caliban, or at least the notion that certain Latin American intellectuals would latch onto Caliban as sort of an image of self, is the idea that, or at least part of their argument is that, rules are written by those, or rules are written to favor those that write them, and therefore those that break them in some way are challenging those who have written the rules. And so, there's a long history of beginning with that I'm not going to mention here of how certain structures have sort of been imposed from the outside, policies, monetary policies, but also political policies, and in some way, although I might not always agree with the aim of that Calibanesque face, I think that it's a sort of powerful, it's a powerful stance to take in part of a negotiation of powers. No, I guess that's sort of my. Yeah.
Thank you all for getting us off to a great start, an intense, deep discussion, and we hope to have more of this in the next two panels. The next panel will be led by Professor Palmer.